China's shadow banking giant Zhongzhi Group has filed for bankruptcy. According to a civil ruling on January 5, 2024, by a Beijing court, the debtor Zhongzhi Group filed for bankruptcy and liquidation on the grounds that it was unable to pay its debts as they matured, that it had insufficient assets to pay all of its debts, and that it was clearly insolvent. According to the civil judgment, the liquidity of the group is seriously lacking, with only 1.81 million yuan, or about $255,000 left in cash. The giant company, known as China's Club for the Rich, collapsed at an alarming speed after China's real estate sector was plunged into a devastating crisis. On China's social media Weibo, a netizen commented, "The Zhongzhi system is all bankrupt and liquidated, so it's a complete finish. There are corresponding scythes for every stratum of the population." Someone else wrote, "The rich are destroyed by trust, the middle class are destroyed by stocks, and the poor are destroyed by P2P. P2P refers to peer-to-peer lending, a form of financial technology that allows people to lend or borrow money from one another without going through a bank. The bankruptcy of the group is one of the largest bankruptcies in China's history, putting even more pressure on the already fragile mood of Chinese consumers and investors. A real estate slump, weak domestic demand, and sluggish trade are all weighing on the economy, with mainland stock indexes tumbling for the third year in a row. Founded in 1995, the Beijing-based group has more than 1,500 companies under its umbrella. Its website says the group holds stakes in 6 licensed financial institutions, including Zhongrong International Trust, 5 asset management companies, and 4 wealth management companies. The main business of the Zhongzhi family of companies is asset management, financial services, wealth management, and so on. It has a wide range of industries in trust, insurance, futures, public fundraising, private equity, finance, real estate, education, science and technology, new energy, and many other fields. The size of the group's assets exceeded that of China's largest private real estate company, Evergrande Group. Chinese media reported that the assets held, invested, and managed by the group through its subsidiaries amounted to RMB 3.6 trillion, or about US $506.2 billion. Shadow banks like Zhongzhi were loosely regulated companies, and the trust industry was an important alternative source of financing for weaker borrowers, such as real estate developers and local government financing platforms that were unable to obtain conventional bank loans. The bankruptcy of the group is even more disastrous than Evergrande. First, the size of Zhongzhi is more than 500 billion, which is a bigger hole than Evergrande. Secondly, the group is known as the rich man's club. It has 150,000 high-net-worth individuals, meaning investors who have invested at least US $420,000 or more. It also has nearly 5,000 corporate clients and 13,000 professional financial planners. The thresholds for entry into Zhongzhi investment are all said to be in the millions of RMB, with the highest individual investment amount allegedly as high as RMB 5 billion yuan, or more than US 700 million. All these investors who possessed at least millions of US dollars have lost their money. Undoubtedly, this will have a knock-on effect. What is the knock-on effect? We'll discuss that in the second half of this episode. The story of the Zhongzhi system is not over yet. Now, several of the chairpersons of listed companies under the system have been reported missing, and more than 300 of the company's executives and senior staff are awaiting sentencing. It can be said that China's financial companies like Zhongzhi have become the graveyard of China's rich and middle class. The principle behind the growth of the group is simple. It provides high returns with an annualized rate of return of 8 to 10%. Chinese banks have kept interest rates low over the last decade or so in China. In this environment, the group has provided a substantial level of return to the wealthy. In the last couple of years, its annual rate of return declined slightly. Documents show that in 2022, it provides an annual return of about 7 to 8%, which is still compared favorably with bank interest rates on deposits, which were about 3%. So why do wealthy Chinese trust this group so much? It's because the group has long been backed by bureaucrats. The Chinese media reported that in 2023, Beijing's public security forces opened an arrest case against Zhongzhi, and at least 8 cadres above the department level were arrested. They were called the group's 8 golden guardians, who acted as the 8 principal officers. Here is the list. The president of the Tribunal of the Supreme Court of China serves as the president of the board of directors of Zhongzhi Group. The former deputy director of the China Internet Network Information Center serves as the chief operating officer. The former director and spokesman of the General Department of the Foreign Exchange Administration as the chief economist. The former deputy director of the legal department of the China Securities Regulatory Commission as the chief compliance officer. Compliance is a matter of getting rid of a lot of troubles when dealing with government departments. The former deputy director of the Beijing Municipal Taxation Bureau serves as the chief financial officer and press spokesman. The former official of the Ministry of Public Security's Economic Investigation Department serves as the chief risk control officer. A former Director General of the State Administration of Safety Supervision and later the Ministry of Emergency Management as the Chief Resource Officer of the group. A former Deputy Researcher of the Legal Department of the Securities and Futures Commission as the Chief Financial Officer. These people as the official backing, it was easy for the group to attract clients and raise money. One of the characteristics of running a wealth management company in China is that one needs to have some sort of government connection. If it's all private, it's not trustworthy. But if there is a bureaucratic background and these wealth management companies are linked to large state-owned enterprises, it offers some sort of assurance, leading the smart and rich to think that things couldn't go wrong. Someone would be there to take care of the business even if it loses money. So where did the group invest its clients' money? There were hardly any restrictions on selecting investment targets for the Zhongzhi Fund. First, it invested in some listed companies, buying shells or acquiring others, then packaged and listed them after restructuring them, amplifying these companies' value. In addition, the raised money was then invested in different industries. Some analysts have lamented that the group's management standards were so low that it invested in some poorly performing companies in China. Here's a list, and virtually every company invested in by the group failed. The deadliest is probably its relationship with real estate. The Wall Street Journal reports that China's massive trust industry, which managed more than $3 trillion in assets at the end of June 2023, has long been an important source of financing for Chinese real estate developers. Some of the group's investments went into real estate, which used to have a high rate of return. It turned out that when real estate blew up, these investments went down the drain. China's real estate industry was so profitable that in the past, the government and real estate developers worked together and wove a big scam. The public was made to believe that the housing price would keep going up and up and up because land was scarce, and therefore investing in real estate was a product that would never go down. The worst debt for China's financial system comes from real estate. Now China's commercial banks, including state-owned commercial banks, have 80% of their loans related to real estate. So, we see that Evergrande used more than RMB 3 billion to make a total equity of RMB 2.4 trillion, a process reached entirely by raising debt. When the real estate bubble bursts and prices fall, this Ponzi scheme cannot continue. Bank loans can't be repaid, debts raised through financial products can't be repaid, and the chain of the system starts to break. One link after another like falling dominoes. The founder of the group, Mr. Xie Zhiquen, was very low-key. Only after many years did the public discover that his second wife was Mao Amin, a singer who was once a household name in China, and they have a daughter and a son. The wealthy celebrities in China's entertainment industry also gave much of their savings to the group, and now they have lost it all. From last year to this year, divorces of famous entertainment celebrities have been reported, and some of them are said to be related to this incident. Xie Zhiquen died suddenly on December 18, 2021, at the age of 61 years. The reason for his death was said to be physical issues while working out. But now people are skeptical of this claim, as they realize that there were actually early signs of the group's collapse. I'm here to break the news to you. I have a friend in China who is in the investment circle. He once talked to the founder of Zhongzhi, Zhe in person because Zhongzhi was in trouble back then. The people in the circle already knew that Zhongzhi had been in trouble for several years already. Before She's suicide, he had already been desperately looking for money everywhere. This friend of mine later communicated with him and learned a lot of insider information. This friend told me that She was taken away by the authorities for investigation before the accident. It was found that they were all worthless enterprises. The government was prepared to treat them like they did with Jack Ma, the owner of Alibaba. The government was prepared to exploit the situation, but found that they were all worthless and that there was no money in them, so he was let out. The blow-up of Zhongzhi Group was sudden. It happened in August 2023. At the time, one of its trusted companies failed to pay out immediate dividends to its clients on high-yield investment products. Here is our previous coverage. Let's take a look at this confession letter that has shocked China. The letter starts with this: Dear investors, my most important friends, partners, and family. Hello, I am Liang, 40 years old, a financial professional for 15 years. I have worked at Hong Kong Wealth for 7 years. I am the financial planner you once trusted immensely and entrusted virtually all your fortune to me. First, today I sincerely apologize to you, and I'm deeply sorry. It is me who failed your trust. No one expected this, a company established 28 years ago with experience of the storms of China's economy. It didn't survive the pressure of China's economic downturn, despite being China's top private enterprise group and the largest private asset management company. The passage that attracted the most attention is this one. The incident involved 150,000 high net worth investors, nearly 5,000 corporate clients, and 13,000 professional financial planners. It involves 230 billion yuan or $32.2 billion in debt equity. Due to the significance of this incident, the State Council has set up a special risk mitigation group, which together with nearly 100,000 employees of Zhongzhi Enterprise Group seeks to do its best to ensure that the rights and interests of investors are safeguarded to the fullest extent possible through a fair and market-oriented approach. At present, under great pressure, the group's various asset liquidations, debt restructuring, and auditing work are being methodically carried out. The purpose is to maximize the protection of the rights and interests of 150,000 creditors with a total outstanding amount of 230 billion yuan, including many employees of the group and the executive team. It includes you and me. The author of the confession letter describes himself like this. As a frontline financial planner, investor, and team leader at the grassroots level of the group, I assisted in the management of nearly 50 groups of clients involving 150 million yuan, or about $21 million in related capital. I am one of the grassroots members of the group. These days, we have been on the phone with clients. We are losing our voices, being blamed, questioned, and contacted by all kinds of people every day. I have been under high stress and almost collapsed a few times. The financial planner also wrote, I have heard and witnessed various tragedies of varying degrees of severity occurring across the country within the company. There are financial planners being pushed by their clients to the point of ending their own lives. Some clients have taken an extreme approach to defending their rights, including kidnapping the financial planners and threatening them with knives and gasoline. Incidents involving illegal means are abundant. I know of clients who are in their 90s lying in the hospital waiting for money to save their lives, or a business owner who lost his project because the funds for it weren't available in time. It has really been a constant stream of human tragedies. At the end of the letter, he wrote, I am grateful for all the happiness and hardships in my life. I thank all the people who love me and hate me. Maybe everything is arranged by heaven. This disaster is still going on. Cheers to everyone, and cheers to myself. Cheers to Hong Kong Wealth. Go Zhongzhi. Go China. 3 days after the group disclosed that it was seriously insolvent, the Chaoyang branch of the Beijing Municipal Public Security Bureau notified the public that it had opened an investigation into the wealth management companies belonging to the Zhongzhi system. The group defaulted, but the public didn't expect that it would file for bankruptcy straight away. It was handled differently from previous cases. In recent years, China's major debt crises have often been restructured first to avoid formal bankruptcy. For example, HNA Group, which folded with RMB 1.2 trillion in debt, completed its restructuring in 2022. Moreover, Evergrande's default in 2021 accelerated China's real estate crisis, but with debts of RMB 2 trillion, it is still trying to avoid liquidation and hasn't yet filed for bankruptcy. The court case against Zhongzhi also underscores Beijing's reluctance to bail out financial firms struggling with real estate investments. It has exposed flaws in China's 3 trillion trust asset market and risks in the country's fast-growing private credit market, where there is a lack of public information and transparency about the channels used to raise funds outside the banking system. At the same time, the group's bankruptcy also highlights the challenges Beijing faces in dealing with large-scale and sometimes hidden debt problems. It illustrates the failure of the CCP's efforts to deleverage riskier areas of China's financial system. Despite Beijing's attempts to enact stimulus measures to revive real estate sales, China's housing market remains sluggish, with sales falling in 20 of 24 months over the past 2 years. The Wall Street Journal believes that the group's declaration of bankruptcy after a disastrous year has triggered concerns that the world's second-largest economy may face a Lehman moment. The term Lehman moment refers to a situation in which the problems of one company or one seemingly minor component of the economy turn out to be so large that they become everyone's problem. According to a previous analysis by a lawyer from a law firm in Shanghai, the group's investors may suffer economic losses of more than 75%, and the case trial process is expected to be slow and lengthy. Let's now look at the Chinese community's reaction after the announcement of the bankruptcy of Zhongzhi. Strangely enough, it has been relatively quiet. China's Zhongzhi Group and Zhongrong Trust were actually much bigger than Henan Village Bank. Protests were also staged in various places, but the scale of the protests was relatively small. They can't be compared to the scale of the protests triggered by the village banks in Henan.
We just
talked about the Zhongzhi system that crashed. It said that it had over 10 million creditors on the books. They were all warned. We've seen the internal documents of the Zhongzhi Group. Basically, they are warned not to make trouble or let out what happened, or one would have to be audited by the authorities in the future. So, the Zhongzhi Group owns a lot more money than the Henan Village Bank, but you can see there's no one, very quiet, very few people come out to hold up signs and make trouble. That's what the government is saying. What's the point of making trouble? If you do, you have to cough up the rest of your money so no one dares to protest or make trouble.
The group is, in a sense, the rich people's club in China. Outsiders couldn't easily get in. Inevitably, the rich in China are involved in collusion with the government. While businesses are in the process of making their fortunes, a lot of the money comes from shady sources. If the government threatens to audit them, they will find it difficult to protect themselves. The CCP knows the weaknesses of these Chinese tycoons. The knock-on effect of the bankruptcy of the group is far-reaching. It's because financial enterprises are interconnected, and the failure of one enterprise will cause its creditors to be unable to get back their investments, and its creditors may owe money to others. After that, its creditors may also default, so the crashes come in chains. Now suddenly, the wealth of the high net worth group of about 150,000 people has been devoured. This group of people has knowledge and visions, and they are also the beneficiaries of China's reform and opening up, as well as the supporters of the existing red system. How would they react when their wealth is reduced to zero overnight? Such an economic crisis has victimized the affluent group too. In fact, it has victimized many such people who are quite supportive of the CCP. Not to mention, all of them may be inextricably linked with the CCP. Not only that, Guo Juin, a former media figure in China, has also revealed that the Chinese Communist government is going to cut the Chinese chives of the rich who have assets of more than RMB 30 million yuan. That is US 4.2 million.
Recently, someone broke the news to us, saying that Beijing was getting anxious. It was not only going to cut the Chinese chives, but also to pull out their roots. According to the informant, an internal order was issued that all people with personal assets of more than 30 million yuan would be subject to an audit to find out where the money came from and whether they had been involved in corruption and embezzlement, or if there is any tax evasion. Basically, rich people can't escape this kind of investigation. Now, everyone must report voluntarily the amount of money that was obtained illegally. If the authorities decide that the amount isn't satisfactory, for example, if the amount of $2 million is reported and the authorities decide that it isn't adequate, then they will conduct further audits. Therefore, everyone is nervous. Of course, the most nervous are Beijing, Shanghai, Guangzhou, and Shenzhen residents. If someone in these cities has 2 or 3 flats, one has crossed the line. The question is, in China, no matter whether you are an official or a business person, who dares to claim that one is clean without any problems?
There is a popular term in mainland China and overseas Chinese circles nowadays. That is anti-CCP. This term refers to people who are dissatisfied with the CCP, especially those willing to participate in overthrowing the CCP's ruling position in China. As more and more China's rich are robbed of their wealth in various ways by the CCP, it's likely that they too will be pushed into the ranks of anti-CCP.